Let's go across now to Sonal for our special segment Under the Lens.
Thank you so much for that. Well, the stock on my radar is IZMO today because that stock has been on quite a ride lately. If you look at the last 1 week, the stock's been under pressure. It's hit lower circuits for 3 straight sessions, down nearly 18% this week. But this comes after a massive run-up because the stock was up 86% in August and 90% uptick in September itself. What does the company do? It offers high-tech automotive e-retailing solutions across North America, Europe and Asia. Their client list includes some big global names: Sony, Audi, Nissan, Ford, Honda, Hertz, Suzuki, Renault as well. The business is spread across 3 key segments: IZMO Studio, which is their interactive media arm; there's IZMO Auto, which is digital retail and CRM platform; and Frog Data, which is an AI and data intelligence platform in the company. On the shareholding side, promoters hold about 35% stake. The public holds majority of the chunk, 64%, and there's no institutional holding yet. Let's take a look at the numbers. Revenues for Q1 FY26 came in at 57 crore rupees. For the full year, that's been steadily rising. 132 crores in FY22, then around 154 crores. It reached levels of 225 crore rupees in FY25, and in Q1, it has come in at 57 crore rupees. EBITDA stood at 10 crores in Q1. That was 39 crore rupees in FY25. Now, do remember, margins are currently around 17 to 20% for the company. Profit after tax has improved, 16 crores in FY22, rising to 49 crore rupees in FY25. But remember, that is largely led by higher other income in FY25 at 35 crore rupees. Return on capital employed, that remains modest, 8% in FY25, which compares with 10% earlier and 7% at FY22 as well. Let's talk about the commentary coming in from the management. Post Q1, they said that growth is being driven by new clients in the US and Europe, and the company has also entered the German market. They're guiding for 25 to 30% revenue growth in FY26 and are aiming to expand margins to 35 to 40%. Now, that's a big ask they have now. Another key update is IZMO plans to sell a stake in its AI arm, Frog Data, by the end of this fiscal itself. That is what they said in the conference call. They expect positive EBITDA contribution from new segments starting Q3 and Q4 itself. The company has also forayed into the semiconductor sector through its wholly owned subsidiary, IZMO Microsystems. They'll offer system and packet solutions from a new manufacturing facility in Bangalore, and they're targeting revenues of around 200 crore rupees in the next 3 years itself. A few concerns though. Debtor days, they've gone up to 161 days in FY25 from 110 days earlier. If you talk about the cash flows as well, cash flows from operations have declined from 31 crores to 4 crores in FY25. The company says the debtor days increase is because clients like Hertz and Avis, they are taking longer to make payments, and it's also linked to new business incubation cycles. On taxation, the management noted that tax rates remain low due to tax shields in overseas subsidiaries. India remains as is, but they have declined to share more details, calling it confidential. At current levels, the stock still trades 69 times FY26 earnings. Now remember, ROE, ROCE is weak. Other income contributed to a chunk of profit in FY25. Operating cash flows dipped sharply in FY25. Growth CAGR has been 17% for the 5 years. Yet it trades at lofty multiples due to hot sector presence, which is basically AI and chips. But does it have the competitive edge in these segments? Do these justify the valuations? That remains the big question.
Remains the big question indeed. 86% in August, 90% in September. Well, IZMO indeed our candidate for Under the Lens. Take a short break and more on the markets on the other side. Stay tuned.